All right, traders, especially traders who have been with this channel for a while, let's see how well you do on this one. So you are trading the daily time frame, which you're supposed to do, and you have entered a euro-yen long. Your stop loss is at 140 pips, and you are now officially in this trade. You go back and check a few hours later, and you are getting destroyed. You have lost 110 pips in 3 hours, and price keeps falling. What do you do now? You don't have much time. What do you do? What do you do? There's only one answer here. And if you didn't get this answer, your next 20 minutes belongs to me. Let's go. This is a very important video, and a video that I hope a lot of you will be able to come back to every time you need it, because you're going to need it. It's not a knock on you. It's just the natural human nature of things. But discipline is one of the most important things out there. Now, why? Well, to put it bluntly, you can do everything I have told you to do up until now to the letter, and you're still going to find a way to fuck it up. It's just inevitable. It's like I said, it's nothing against you. It's going to happen no matter how much discipline you have in your life right now, in your trading, no matter how hard you try. This is going to happen anyway. So the best I can do is just to have a video here that you can always come back to when you catch yourself slipping this way. Because that really sucks. You've taken all this time to learn how to do things the right way, and you actually are the few percentage of people that actually take it and put in the work and put it into motion and actually start trading with it. And now you're still losing because you have gotten in your own way. And like I said, traders, this is inevitable. So I can't hold your hand while you're trading and prevent you from doing things like this, but I can at least kind of break this down to you the best I can. And hopefully it will work. And if it doesn't, like I said, you can at least come back to this video if you need to. So the secret to great discipline is pretty damn simple. You do what I have told you to do up until now. You create a disciplined system of entries and exits. You have something right in front of you that you use every time that tells you when to enter and tells you when to exit. Because if your system is doing it, that means you're not doing it yourself. And that's a good thing. We'll talk about that. But really the key part here, and it seems so easy, is just to never ever deviate from it. You put this system together, you've tested it out, you know it works, let it work. Simple, right? Well, not really, because separating logic and emotion is really hard to do, because you can look this up. Even when you use logic, there's still a degree of emotion involved. And emotions are the killer of good decision making. And if you are trying to extract money out of a $4 to $5 trillion a day market, you are going to need to be at your best. And when emotions come into play, you are no longer at your best. Think of every dumb decision you've ever made in your entire life. Emotions played a part, a pretty big part, I'd be willing to bet. That time you got really angry and said something, or even worse, did something that you really, really regretted later on. Or that relationship or relationships that you stayed in way too long and ended up taking up a good portion of your life that you can't get back anymore. All of those decisions had one major thing in common, and that was your emotional state. It was turned up. And as a result, you weren't thinking. You were not at your best. And you need to be at your best every time when you're trading this market. And the only way you are going to get there is if you find a way, just in those moments where you're trading. What you do with the rest of your life is up to you. But in those moments when you're trading, how well can you separate emotions from everything else? Because if you don't do this, if you fail to get emotions out of the equation, now you're trading by feel. And this is a bad, bad idea. If you were to record every trade you made, entries and exit, just by feel, by the way you feel the market is going and where it's headed, you would come out a huge loser every time. Conversely, that system you put together, if you have tested it and done it the right way, and I even have a podcast episode, is episode 6, I'll link it down below, that shows you how to do all that. If you've done that, and it has been proven to work, you have something you know works. To where this is something that I can promise you does not work. All right? Pick which one you want. One makes money, one loses money. When making big decisions, you must take emotions out of the game. Think of the people out there that have to make really big decisions all the time. Think of like a military strategist. Okay? He can't put something together based on a past grudge, based on rage, or even just based on the fact that he's pumped up because he just got done winning a battle. He has to stay in the pocket. He has to get his wits about him, get emotion out of the equation, and use his intellect and his strategic thinking the best he can. If he has anything getting in that way, lots of people are going to die. Now look, I'm not a psychologist, but you cannot argue with me on this one. Battles are won and lost here, and we are in a battle every single time we enter the market. We have to be at our best, and we cannot be our best if emotions are getting in the way. So let me give you a blueprint for how to do just that. Like I said, seems simple, but when it comes crunch time, you're going to deviate from this at some point. But the best I can do is give you a structure to follow. So here is how we best get around that. So we set up our strategy. We know exactly when we are going to enter and when we are going to exit a trade. We have found a trade we like, and now it is time to execute it. Real easy, right? Here comes the hard part after this. Let the market do what it does. Don't interfere as much as you're going to want to. You interfering is not letting a proven system do what it is supposed to do. It is letting you, the trader who's trading by feel, interfere and fuck it all up. Even if you are right, it doesn't matter if you're right. Actually, you being right is probably the worst thing that could happen here. And you have a 50-50 shot of that happening. The market either goes up or down. Because if you were right to interfere this time, that's going to ruin you down the road, because that just justified this madness, and now you have a license to trade by feel. And like I said, worst thing, especially long term, that could ever happen. So just don't do it in the first place. It's real simple, traders. Set up your strategy, execute the damn thing, let the market do what it does, and then just repeat the process over and over. So simple, right? But it never fails. We end up making these huge mistakes down the road. Let's talk about those. Let's identify them so we can identify them when it happens to us. The mistakes most traders make from a lack of discipline standpoint are like this. Looking at your trade intraday, just like the beginning question I asked. The correct answer was nothing. You would have done nothing if you never looked at it. This is really tough to do. We trade on the daily chart here. If you don't understand why, I'm going to link that down below too. That was also a podcast episode. But this concept is crazy to a lot of people. We like to have the little apps on our phone. We like to check in and see how our trade's doing every couple hours, every hour, depending on how often you want to do it. You don't need to be doing it at all. You need to ignore it completely. Sounds crazy, right? That I'm taking away a big part of your day. But by doing this, you're not letting the market do what it needs to do. Check in tomorrow. This is how you avoid interfering, is by not even looking at it. I've told you all before, I trade everything at about 1:40 p.m. Pacific Standard Time. Enter my trades, manage a trade, whatever I need to do. And the very next time I go look at it, 1:40 p.m. Pacific Standard Time the very next day. I didn't look at it one time in a 24-hour span, because if I did, then I run the risk of me jumping in and doing something I probably shouldn't do. I can guarantee almost all of you make this mistake, so stop making it. Another thing that a lot of us do is chase losses. So this is deviating from your money management strategy because you've taken a couple losses and you want it back. And you don't like where your account is right now, and you want to get it back to where it was. And so you overcompensate. And this ends up being this downward spiraling effect over time that completely wipes your account out. I'm going to make a separate video in the psychology playlist called How to Lose. And it's going to go over this a little bit further. So I think this is obvious to some of you. It's obvious to anybody who has basic money management skills. But it's something that really needs to be talked about, because there's going to come times where you take a few losses and you have a decision to make at this point. But the last thing you should do is up your trade value because you want to get it back. Terrible, terrible idea. Panicking is a big one, and this is why we don't look at our trade intraday. We let the market do what it does. We come back the next day, and then we evaluate what we need to do. Because just like at the question in the beginning, a lot of you would have probably taken some money off the table because you just lost a lot of pips at one time. Often at times, this is the wrong way to go. Taking drawdown is a big part of Forex trading. It's going to happen on almost every trade you make. And so you need to train yourself not to panic and cut bait at the wrong time. And just simply by not looking at the trade, you can easily do that. But like I said, sometimes that's too big of an ask for some people. Taking a picture is kind of the opposite of panicking, even though it both has to do with exiting a trade too early. Taking a picture is something you learn in boxing. So what it refers to is if you land a really good shot on somebody, but they haven't gone down, you have this propensity to not do what you need to do right afterwards. You need to follow up. You need to land more shots. You need to have a strategy in place. But we always want to sit back and admire the shot we just took. Landing a clean shot on somebody in boxing and having them really be affected by it is pretty rare. So when it happens, you just want to kind of stand back and marvel at it. But if you do that, your boxing coach is going to chew your ass, because that is the wrong thing to do. Now, the equivalent in Forex trading is you just hit a really nice trade, and it has given you hundreds of pips in a very short amount of time. So you went from having a break-even trading account to all of a sudden now you're like 2.5% gain. And that total that you're staring at looks really, really good. And you don't want that total to go down. You like where it is. And so instead of going through the money management process that you've set up, the money management process that has been proven to work, you go ahead and just take the whole thing off, leaving you with a really pretty total in your trading account for you to be all proud of. Good for you. You made money, and now your account's looking good. But this is when it invariably happens, and it's happened to me. I've made every one of these mistakes. This is why I can speak on it. But this is when that trade goes another 500-600 pips. 500 to 600 pips that you should have been taking part of, but you didn't, because you took a picture instead of letting your system do what it does. So rest assured, you can exit too early when you're losing, and you can also exit too early when you're winning. Neither one of them is the right move. You, the human, emotional being, injected yourself where you shouldn't have. Bad idea. You have to give your system time to work. You have to let it do what it does. You cannot deviate from it. Now you might be saying, well, VP, you sure are repeating yourself a lot. Well, yes, I am. Because no matter how much I repeat myself, it doesn't matter. You are still going to make these mistakes. The best thing we can do at this point is identify them so we're actually aware of them when they happen. We can't fix a problem that we're not aware of. So slides like this are very important, because this is the slide you're going to come back to when you find yourself making mistakes from a lack of discipline standpoint. Because there's a really, really good chance it was one of these 5 mistakes. Now, I added a 6th, but it's not a direct mistake. It's a little more abstract. And so let's talk about it now, though. I'll kind of give it its own time. And this is not understanding the long game. So this is more of a mistake that you're going to make over time, not like one thing you do wrong on a certain day. So let's talk about this for a minute. So what I mean by not understanding the long game, let's draw a scenario up here. So let's say, and I always take the $50,000 starting account. You got to start from somewhere, and that's the number I always use. So let's say you have one of those, and in 2 or 3 months, you take that thing from 50,000 up to 53,000, which is a 6% return. That is really, really good. Most people have no shot of doing this, and you've done it, and you feel invincible. You feel super smart and accomplished, and you feel bulletproof at this point because you did something that most people can't do. And at this point, the sky is the limit. But then, and this happens so often, you take a string of losses, and in the next month, you go from 53,000 all the way back down to where you started, and you are just deflated. All of those incredible emotions you felt earlier on just got taken away from you. You did all that work to get yourself up to 53,000, and now it's all for nothing. You're right back to where you started from. That is one hell of a gut punch. But this is where you need to be the strongest, because now, more than ever, that door for emotions to enter the game has just swung wide open. And now the chances of you making changes where you should not be making changes is going to take effect. So let me just point out to you that this scenario is not unusual, even for really good traders. You just have to understand, it doesn't matter what you're doing right now. The only thing that matters, if you're trading for real and you're not just testing out a system, you have a system that works. The only thing that matters is what does that account look like at the end of a 12-month period. Just like the price of a currency pair naturally goes up and down, what you have in your trading account is naturally going to go up and down. Sometimes further down than you want it to, but this is normal. Now, more than ever, is when you need to stay the course. Do not fail the long game, because the long game is the game we are playing. Do not purposely fail at this game. Stay the course and keep going exactly the way you've been going and see it through until the end, as much as you're not going to want to. Things like this is what is going to vault you into that top 0.1% of all Forex traders, where everybody else would have quit, or they would have made changes they shouldn't have made. When it comes to discipline, this is a huge test you're going to have to pass. So if you find this situation or this scenario coming up in your trading, and you invariably will at some point, come back here. I got your back. You're going to be fine. You just need to realize it. So now that we have identified the major mistakes, it's time to actually talk about what we can do about it. How can we be proactive? What is something we can follow now to make sure these things happen as seldom as possible? First off is, let's go from a more macro point of view. If you are somebody who usually does not have a lot of discipline in their lives, and you are self-aware enough to realize that, that's great, but you're still going to have a hard time trading Forex unless you make some changes. And I have a book that I recommend, and I recommend very few books. I've read so many, and so few actually have, especially at this stage, have an impact in my life. But I read this book not even a year ago, and it changed me for good in so many different aspects, and it has done that for so many people. And I've recommended this before. It is Jocko Willink's book, Discipline Equals Freedom. There is no way this book cannot level you up after you read it in so many different aspects. And do yourself a favor, too. Get the actual hardcover version instead of the Kindle version. If you do that, and if you read it, you'll see what I'm talking about. And I'll provide a link down below for you as well. I make no money off this. This is just a recommendation that I strongly recommend for all of you. It will really focus you where you need to be focused over any other self-help, hustle, go-get-it type book out there. This thing is legit. People ask me for books on Forex recommendations all the time, and I tell you they are all terrible. Do not read any of them. Any books I do recommend are mindset books, and this is at the top of my list. But from there, let's drill down on a more micro level. Do this, and if you do this, the chances of emotions entering the fray where they shouldn't are going to go down. I can't guarantee how far down they're going to go, but we need to be proactive here. So this is what we do. Take the time to put a system in place and prove that it works. That, so far up to this point, is what my entire YouTube channel and what my entire blog has been dedicated towards having you do. A lot of you are doing this right now, and I love it. The rest of you need to catch up. Go to episode 3 and find out why we trade the daily chart. Go to episode 6 of my podcast and find out how to demo trade and why it's so important that we do this first. Those of you that are watching my videos and trying to apply it to a real money account are making a huge fucking mistake. Get back to demo. It is crucial that you do, and that video or that podcast explains why. I understand you want to make a bunch of money now, but again, this is about the long game. This entire channel is dedicated to how to win the long game. If that is not enough for you, then go somewhere else. There's plenty of quick fixes out there online. None of them work, but people like you need to learn the hard way, so go out and find them, and I wish you the best. But for the rest of you, get that system together and test it out until you have something that works really well. Because sticking to a system like that is the #1 way to have discipline in your trading. And you can't do that if you don't have the system in the first place. So once you have it, always take trades that only satisfy your criteria. If you have 4 indicators and all 4 of those indicators need to be satisfied before you enter a trade, then don't take trades that only satisfy 3 of them. Even if that trade went on to win later, who cares? That's not your trade anymore. Stay disciplined in the way you enter your trades. And then don't look at it. Enter the trade and then go away. Don't come back till later. You want to make 100% sure that your emotions don't enter the fray and do something stupid? This is the one way to do it. It's completely different than probably what you're doing right now, but understand how far this goes in making sure you have the best result at the end of a 12-month period. You want to know how to keep bad discipline out of your life? This is how. And once you have that system in place, never deviate from it. Easier said than done, but this is the key. The one thing you really want to avoid is making sure that you don't enter the fray yourself as an emotional person, because you are not smarter than the system you created. Now, this sounds strange because your smart self created this system. But what you did, if you did it right, is you put this system in play and proved that it makes money. You coming in and trading by feel never makes money in the long term. You might hit a couple, but over time, that is going to kill you. You are not tapped into the Forex market in some special telepathic way. It's nonsense. Create a system that has been proven to work, use it, do nothing else. The end. That's it, traders. Now, there is no other channel on YouTube or anywhere that makes videos like this. You need this channel. Every video I create is designed to change your trading for good in a very, very positive way in a very short amount of time. So if you want to learn how to put that system together, that is exactly where you go. You need this channel. Subscribe and hit the bell so you don't miss anything I do. And I do a lot for you. New podcast every Monday morning, new trading video every Thursday morning. Get some discipline in your life, get some discipline in your trading. Go out there and get it.